if you're a business and you have money in the bank in large amount, will they want to suffer the potential devaluation of US currency? And if not, what are they gonna put some of their money in to try to shield themselves against that? And that's the challenge, is that right now there's no other strong government currency that can act as a global reserve currency worldwide. So at that point, is crypto interesting for that? Maybe it's Bitcoin, maybe it's a basket of cryptocurrency, but they are all highly correlated to each other. So maybe it will be Bitcoin with those ETF coming. So we think it's several billions of dollars that will flow into the Bitcoin ETF, but maybe it could be a large chunk of corporation just being afraid that the US currency will get devalued significantly.
13 firms poured $1 trillion in cash. And these are all big tech companies that we know of: Apple, Google, Microsoft. On this video today, we're going to talk about what are the chances of them investing in crypto. Will it be Bitcoin? Will it be other assets? Let's discuss. Hit that like button, share it with your friends so more people can get access to this information. Michael Saylor, as of November, is up nearly $1 billion on its Bitcoin investment. So he's showing these other tech companies on why investing part of their portfolio in crypto is the right idea. He has encouraged companies to allocate a portion of their treasuries to Bitcoin as a safeguard against the devaluation of fiat currencies and the erosion of purchasing power. And with the market continuing to rise, it looks like he has been making the right decisions. Just take a look at this chart that Michael Saylor posted back on November 26th. MicroStrategy is up 321% since August 10th, 2020. Right behind that, Bitcoin at 221%. Meanwhile, companies like Google, Microsoft, Apple, Meta, they're up 85% at most. But the question shouldn't be, does it make sense to invest in crypto? Because clearly that's a given. The question here is, should it be Bitcoin or potentially other assets? Take a listen to what tokenomic expert Patrick has to say on this topic.
We've seen Bitcoin within a month losing more than 50% of its value in the last crash in 2021. So if you're a business and you need to pay your employee, you might not convert that much of that 180 trillion into crypto because you're afraid that at any moment it could crash just as bad. So the point of this is that we need new kind of cryptocurrency that are more stable and resistant to crashes. And Bitcoin is not such thing, at least not yet. Maybe it will be in the future. So what do you need to achieve this? And people in the industry call that flatcoins. So it's kind of like a US currency stablecoin, but that grew a little bit, maybe at the size of or speed of inflation. And I would argue that ideally, you want to grow maybe a bit more than 8% per year, because I think the true purchasing power decreases maybe a little bit more than that. But regardless, you need some sort of cryptocurrency that grow really stably and doesn't fluctuate too much, not like Bitcoin, but that grow maybe around 10% per year, something like that. So that's difficult to achieve, because then, like stablecoin, like whether it's Tether or Circle, all the collateral they collect from users, they inject it in T-bills. So, but if the T-bills is suffering because of US currency devaluation, then where do you invest to make sure that you produce the yield necessary to operate as a business?
Patrick is proposing a flatcoin, and looking at the Coinbase website, Coinbase Ventures, they're looking at flatcoins. They consider this to be a solution for inflation. But what are the challenges of creating a flatcoin?
You need to generate revenue to operate as a business to support it. And you cannot invest in T-bills because the T-bill yield per year is lower than the inflation rate, typically speaking, or it's so close to it that you would not be able to operate, because the thing Tether, when they take the collateral collected from users, they invest in T-bills. And that enabled them to generate a billion every quarter or so. But it's not enough, because if you have to give the yield of the T-bills to your users, then you as a business has nothing left to operate on. So you need to generate profit yourself too. So that's the challenge, is where do you invest money that is safe and liquid? Because it has to be liquid, otherwise you risk being other organization may try to attempt to depeg your currency.
All right, so flatcoins are on the horizon, but they seem to have their challenges, according to Patrick. What is the solution?
You could have a 3x leverage on Bitcoin, and some exchange offer that, could you have a 0.5 like leverage on Bitcoin? This way you reduce the volatility of Bitcoin. So that's something that I'm working on personally. But the thing, it would be a new asset that is backed by Bitcoin, but would fluctuate less. And that's still risky, because if you launch that at the top of the Bitcoin bull, and then people start to convert to your asset a lot, but then the Bitcoin crash and you have a lot of collateral of Bitcoin, then and people want to move back to Bitcoin to buy back when the price is low, then your collateral has shrinked. So the thing, it's challenging. The first early adopters would be crypto companies. So when you have liquidity in a liquidity pool to support your token, it's paired with something else. So sometimes people pair with Ethereum, sometimes they pair with Bitcoin, but the vast majority they pair with USDT or USDC or DAI. So I would say those would be the first to move to a flat coin, because you have your liquidity pool active for many, many years. But if you suffer 8% or 10% decrease of purchasing power every year because of stablecoin lose that, then a flat coin would financially operate your economy way better. So I think it would be the first to transition to this. And that's why Coinbase is interested into that. And I think once it's demonstrated that it worked for crypto company and their liquidity, I think it will be all kinds of other company that will move into this. Market makers make money for their own investors when they support your project, but they kind of bleed your economy. So if you internalize all the market making yourself and you support your own token, you're the one who collect the revenue generated from that if you do it properly. And I think that can generate decent amount of revenue. And I would argue that is probably the key how to build a flat coin.
And there you have it, folks. Bitcoin may not be enough to get these large tech companies to buy into crypto. We may need a flat coin. What are your thoughts? Do you think we need a flat coin? Do you think Bitcoin is enough? Comment on the video, like the video, subscribe to the channel, and I'll catch you in the next one.